Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now today's episode, we find ourselves Q3 2026, and card game, the brain promotion game, has gotten a little bit more annoying. I'm finding issuers and lenders are changing a lot more ticky-tack type things, which has begged the question of past videos in the comments, where do we think it's going? When is it going to end? What are some changes we can expect to see? So we'll call this a predictions episode, if you will. If you'd like to play along with me at home, I'd love to get your predictions down below. But of course, if that sounds interesting to you, go ahead, press the subscribe button, and let's get to work. Now, in case you're new here, every Sunday we do a weekly recap show, all the news you can use in the week that was in credit and finance. And over the past few episodes, going back probably to the beginning of the year and even late last year, we've talked about a lot of different changes that have happened over the rewards program. Some massive, like the end of Smartly or Bank of America nerfing theirs, and then a lot more changes that I would describe as like ticky-tack fouls, right? So just off the top of my head, I wrote some down. Just a few weeks ago, we put on the Freedom Flex removing its cell phone insurance. Just a small thing, but still, come on, really? We had Chase stop allowing credit card points to be redeemed to external bank accounts. Small thing, but kind of annoying. We mentioned the Bank of America nerfing. That seems to be a little bit bigger of a change, considering that they had the same program for 14 years. So I'm willing to allow that. One that Robinhood added foreign transaction fees to the gold card for new customers. It's likely going to happen for existing customers eventually. The AAA Daily Advantage, one of my favorite cards, no longer works at Walmart for 5% back. On and on and on. You could probably name your own. These are just some that came to my mind off the top of my head. And so, in the comments of these past few Thursday show videos, there's a lot of talk about what's going to happen, what do we think is going to happen, some good discussion. So I thought we would just talk about it. There's a few things I wrote down here. I want to talk about the 5% cards, rotating category cards, because for right now, they seem to be somewhat omitted, although Chase just fired the first shot of the Freedom Flex. I want to talk about banks as a whole, what they're going to do as far as their whole programs, and then some things that banks should still consider and things we should consider as well. So play along at home by all means. So again, no particular order. The reason I bring up the rotating category cards, because those have fallen out of favor considerably. I think years ago I did a video called The City Custom Cash Killed Rotating Category Cards, which I still believe is the exact killer for, and if you don't know, that's like the Freedom Flex or Discover It Cash. Less so the Cash Plus and the Bank of America Customized Cash, because those allow you to pick your categories, but the Chase card and Discover card are like the classics. The categories change every quarter up to, if you can get 5x, up to $1,500 in spending combined category purchases. But anyways, we weren't really using those because the custom cash came out, and the answer, I have 5 Freedom cards and a Discover. Don't touch them anymore, right? And so, because custom cash made more sense because I can pick, and I can have as many custom cash as I can get my greedy hands on. Well, now with the demise of the custom cash, it being retired, I fully believe it's only a matter of time before us folks holding multiple cards are targeted next. I've already seen reports that they're now starting to deny product changes to the custom cash, which would make sense. I mean, in best case scenario, we get to hold on to one of them as a legacy card, but if you have multiples, I just can't imagine they're going to let that fly. So anyways, I can see the 5% cards coming back in favor. It's the reason I haven't closed any of mine when I went through and closed a lot of other cards I wasn't using. That being said, I've had some good chats with a few folks who think those cards will be kneecapped next. And on the one hand, I don't want to read too much into it, but when the Freedom Flex says I'm removing cell phone insurance from that card, I think that's the first chip in it, if you will. And I think we're going to see a lot more of that. I don't think they're going to be lowered from 5% for quite some time. I think what we'll see is benefits reductions, and this applies to a lot of other cards, but benefits reductions not only on the category cards, but other cards across the board, like the cell phone insurance being removed. Remember, these are payment network features, and of course the bank chooses to buy them from Visa, MasterCard, or whatever. And so it's removing cell phone insurance, likely saving Chase some money. It's a free product. They're not making that much for it. Again, I don't know how popular the rotating cards are with regular people, but I can remember my mom not liking it because the categories keep changing. It's a guessing game. I think she uses hers more for the 3X categories and dining than anything else. Addition to that, I think we'll also see more pay-to-play categories on those. Not pay for us, but paid by vendors to Chase and Discover. So, examples. When we see Amazon makes sense because Chase and Amazon already have a long-standing relationship. So when we see Amazon on the Freedom Flex, I don't know, but I'm pretty sure that would be a paid category. And we also see very specific. So I said it's 5% travel, that's likely not paid. But when we see like 5% by a specific cruise line, like Norwegian did it for some time, that to me seems like a paid category where either they're trying to build a banking relationship between the two, or Norwegian's like, I'm going to throw you some marketing spend, you can make me a category, which I don't necessarily mind as long as there's a wide range. If there's 4 categories and one is paid for, I don't really care. If there's only like 2 categories, maybe 3, and one of them's already a throwaway, then that would upset me more. The other thing I can see is lowering the limit of cash back from $1,500 to maybe $1,000 a quarter. Would be tough because again, you still have Bank of America out there with $2,500 and so Cash Plus as well. So you're already a little bit behind, but I don't think we'll see an attack on the 5% right away. I think the core cards themselves will get weaker, and it'll be a push to, like, if you want more rewards, you're gonna have to pay for them in the more expensive cards. And as we know, the more expensive cards have already been offset by coupons and things of that nature. So I don't want to go through every single card. I do think some of those changes will apply to most cards. As well as new 5% cards. I don't think we'll see that many new 5% cards. I would agree with that. We know for whatever reason, 2% back seems to be the number. And even then, so there's not that many banks when you think about it. They go past 2. We talk about it like everyone is a 2% card, but they really don't. So 2% seems to be doable. I think we'll see a lot of more 3s, if anything else, because it's still giving you one above the norm. In some cases, it's giving you doubling you because you're like Bank of America cards 1.5x back on everything. Maybe 4, for whatever reason, they tend to skip 4 a lot. So I think we'll see a lot go down there in newer cards. We also might see new free cards just go on pause for a while, and the only new cards that really come out are the ones that cost money, where the issuer can offset a lot of their costs to passing it on to vendors who are paying to advertise that product. Platinums, Reserves, Strata Premiers, Strata Elite, Stack. Oh no, the Elite, not so much the Premier. That type of thing. So that's that for those cards. Now, I think the interesting one is banks as a whole. And I do think the banks are going to borrow from Bank of America's strategy, but not in like the best light possible. So, Bank of America is very much a relationship bank of give me more money and I'll give you better rewards. And yes, they did nerf their program and it does hurt me, Captain Bank of America over here, but it had been 14 years. It's almost understandable to change it after 14 years. But the thing is, banks obviously they have a lot of products and they want to sell you all the products. I think they're going to get tired or already tired of folks just cherry picking which products they want to use. They try to set it up so it works easier to have more of their products, but none of them really do a good job of it. And you don't have to be over here one of us to be like, I'm going to shop products. That's the one thing. You go get a mortgage, you get a car loan, where they all tell you to go shop. You're supposed to. Your credit even allows you to go get a bunch of different, mortgage inquiries when you're shopping around, right? Without showing up as a zillion inquiries. It kind of like consolidates them more or less. So I think they know that, but I think they'll try to do a more locked-in approach to, well, they might give you one product, but they're going to want us to be actual customers and actual good customers. Now, I don't think it's going to be like really hardcore, like you've got to spend so much, but I think it will be rolled into the underwriting rules, again, like Bank of America. If you're not an existing customer, then it's 3 and 12, 3 new accounts in the last 12 months. If you are an existing customer, then it moves all the way up to 7 and 12. I think we'll start to see more things around the products to get you to use them. So the cards we kind of covered, but the cards will have less value all the way around, less Visa, less MasterCard rewards, especially at the free level, to try to push you up to the big ones. Like we just saw the Sapphire Preferred, get a haircut, lose a quarter point on redemptions to Hyatt, right? I think we'll see things like that. And then deposit accounts, well, we've already seen a lot of checking account fees go up. I was refreshing the Citi blog post the other day on Profitable Content. Back in the day when I wrote that like 2 years ago or something, it used to be $5 for access checking. Now it's regular checking, but to avoid the fee, it's $15. I know Wells Fargo's just went up as well. I think last year, I think it's $15, and what it takes to waive the fee also went up. It's either like I think you just had a $500 balance before. Now I think it's like $1,500 or something. I'm going off the top of my head on that one, but we've seen it across the board. Those type of fees change. I think fees for statements being mailed to you will be in place. Some credit unions do that, not so much for banks, but I think we'll see things of that nature happen. We'll see a lot more tied to your overall relationship balance. They'll try to roll it into underwriting requirements to a degree, like again, like Bank of America, for example. It could go so far as just, with Bank of America, we could see. I don't think they'll do it like Bank of America does, like, hey, if you have this much with us, then your credit card actually earns this much back. I don't think there's a need to, because again, remember, Bank of America's cards suck without preferred rewards, or B of A rewards, as it's called. The other issuers don't really have that problem, but they'll very much try to kind of lock you into the point where it will be fairly hard to like have a checking account and not actually use it, because it'll take $2,000 a month in direct deposits or $2,000 balance. And as we've seen Chase do, well, you're not going to be able to redeem your points externally either. I could see them adding back in the $25 increments, that U.S. Bank is famous for. It'll make it hard now, for people to just be spread out all over the place, I guess is my overall point. They'll be kind of building up a moat around their bank and trying to lock you in to their ecosystem. Now, the other big thing here we talked about a week or two ago was Bank of America and Chase looking to buy a few debit card processing networks. That also, they're just kind of, from what I understand, is a Wall Street Journal article. It's kind of like, they're exploring it, kicking the tires, which we'll never really know how far along they are on it. But if they did that, brought that in-house, it would also potentially give them a chance to make more money on debit cards. Again, debit card interchange fees are capped, but if you own your own processor and you're running it through your own system versus outsourcing it to a third party, you get around that cap. And I don't think that'll mean, hey, they're going to give us more debit card rewards, but it'll be another way they can potentially offset this and maybe even lock, us in a little bit more, perhaps. So that's kind of what I see happening. Again, the 5% card is going to be tougher and tougher. Redemption is going to be a little bit tougher, and the banking moat going to come in to kind of lock us into that ecosystem. Now, I do think there's some things the banks should consider. Sometimes they act like they don't need to compete at all, and the weird thing about it is we tend to love ecosystems, right? Like it's the Apple thing, right? It's an iPad, phone, computer, right? We like the Apple thing because the stuff just works. The iPhone is not like my favorite phone. The MacBook's probably my favorite Apple device, but it just all works. So why would you leave the ecosystem for a phone when you can just get one that works in there? And a lot of times the banks operate more as Sony. And if you're familiar, Sony makes really good TVs. They make the PlayStation 5. They make really good headphones. But none of those things really work together. Like, you should be able to take your Sony XM6 headphones and use them with your PlayStation. And you sort of can. You can take the cable and plug it into your controller and you can hear, but you can't talk through it, even though you can talk through the phone on your headphones. Again, if Sony just made all those things work together, they would likely be better. If you plug in your PlayStation to your Sony TV, it immediately calibrates. Your headphones can wirelessly connect. They immediately calibrate. There's opportunity there, but they just don't do it. And the banks kind of act like that. If you gave people a really good setup, really good interface, really good technology, really good app, I think people will be more willing to stay, because we all have banks that we stick around with for one reason or another, but very rarely do we brag about, the user experience of a bank. Normally, at best, it's just like, well, it's not terrible. So if you want to create a walled garden like the technology companies have, you should invest in that. It's funny because Google is, when Apple got sued, or Google, one of the two got sued, it became more popular and more well known that, Google was paying Apple like $20 billion to make Google the default search engine on the iPhone and Apple devices. And people thought it was a lot of money, but I don't really remember any outrage. And so it's funny, like, yes, you can still choose your web browser if you want, but for the most part, that option to choose was already taken away from you. And no one really cared because the option was given was already so good. So, if you want me to do these things, you be a good customer, be a good vendor. What do I mean by that? Well, real-time payments are a really good example. Real-time payments should be everywhere. That's the one where you can send money any day of the week and it shows up someplace else instantly, in minutes, not, 3 to 5 days later. I don't want them to go so far as to like waive, all their risk requirements and things like that, but you could treat customers a lot better. Maybe you should look at, warming up a checking account. So if you know the check is going to get caught up if I deposit it, maybe don't unlock mobile deposit as a feature in app until 30 days, until you're comfortable doing that, or find a better way to explain it because it doesn't make a bad customer experience. I could go on and on. The point is just be competitive. I'm personally leaving out rewards because obviously we would just say, give me 15x back. That's not going to happen. But that's the big thing. If you're going to compete, you want people to lock in. The answers are actually right there. We do like to be locked in for the most part. You just really, no bankers have really given us a reason. I can't get a high yield savings account at Chase, even though I do like Chase because I was at the branch today picking up cash to give to, a vendor. I like that, but I can't. Well, I mean, technically I could, but it would be irresponsible to have a savings account with Chase, so I can't do that. We can go on down the list. I think that's the easiest example, but you get the point. So overall, do I think that the game is over? No, not by any means, because they still need to compete. I do think it's just simply going to get harder, and it's going to get harder to just move around to whatever bank you want. They're going to put up moats to try to make it a little bit more difficult. Doesn't mean we won't be able to make money. I still think it's a very profitable game. I do think the bank promotions at least will become a little bit more important in the short term, but hey, that's why we have you covered on both channels. So anyways, let me know what you're going to think down below. Are you doom and gloom? Am I being too optimistic or pessimistic? I'd love to get your thoughts on all of it. Of course, guys, if you like this one, drop me a thumbs up down below. If you found it particularly interesting, consider subscribing to the channel. So we're posting content just like this every single week, and of course, right back every Sunday with all the news you can use in the week that was in credit and finance. And of course, every single day over on profitofcontent.com, which is of course the channel's blog. It's always linked down below for you, as well as on the channel homepage with the latest news stories, bank promotions, and on occasion some credit card offers as well. Anyways, that'll do it for this one. As always, thank you so much for watching, and talk to you very soon in the next one.